Hey everyone, and welcome to this explainer. Today, we're taking a deep dive into the massive geopolitical and macroeconomic forces that are absolutely squeezing today's cryptocurrency market. Right now, we are looking at a market that's coiled incredibly tight, just waiting to spring. Okay, let's jump straight into our anchor point here. Just 2 weeks ago, Bitcoin was actually breaking below $60,000, hitting a pretty scary low of $59,130. But no way did it stay there. The asset has violently rebounded to hold a crucial defensive line right near $66,000. It's honestly a staggering reclamation of territory.
But what's really fascinating right now is this massive tension we're seeing. On one hand, the broader market is flashing an extreme fear index, hovering right between 22 and 23 as everyday retail investors kind of panic. But countering that, an incredibly robust market rebound, fueled by a powerful institutional short squeeze. So it's literally fear on the ground going head-to-head with massive capital stepping in.
All right, let's zoom out. Section 1, the macro relief rally. Well, these events definitely aren't happening in a vacuum. They are colliding in a major way. Today, June 16th, the FOMC meeting officially kicks off. Tomorrow brings the highly anticipated Fed rate decision and dot plot. And then, by Friday, June 19th, a formal U.S.-Iran ceasefire memorandum is scheduled to be signed. These rapid-fire global events are converging to inject some serious velocity into the charts. And you can already see the immediate impact of that geopolitical de-escalation. The upcoming U.S.-Iran ceasefire has pulled global crude oil prices way down to roughly $78 a barrel. So why does that matter for crypto? Well, falling energy prices directly ease inflation fears. And when inflation cools down, it unlocks massive global liquidity for risk assets. It's a real game changer.
But we're caught in the ultimate face-off here. On the bullish side, you've got the removal of a major geopolitical black swan, which unlocks all that liquidity we just talked about. On the bearish side, though, the Bank of Japan recently hiked interest rates up to 1.0%, and that move threatens to unwind the massive yen carry trade, which could aggressively tighten global liquidity right back up.
Which brings us to Washington. Section 2, the Warsh Fed era begins.
So check out this number. The market has already priced in a 97.4% probability of a rate hold at today's meeting. That means the interest rate itself isn't the big mystery anymore. Instead, the entire financial ecosystem is absolutely laser-focused on the forward guidance from the newly sworn-in Fed Chair, Kevin Warsh. We are watching Chairman Warsh's dot plot incredibly closely. Look, if his tone is dovish, maybe hinting that lower oil prices will help them hit their inflation targets, analysts see Bitcoin just rocketing right through resistance to test those $67,000 to $68,775 levels. But if we get a hawkish surprise, like even just mentioning future rate hikes, that could plunge us right back down to test the $64,000 and $60,000 macroeconomic support floors.
Moving right along, Section 3. The accumulators and a massive supply shock. Now, while everyday retail investors were kind of hesitating, and U.S. spot Bitcoin ETFs actually saw $64.8 million in net outflows yesterday, the big players were not waiting around. They stepped right in to scoop up the dip. For instance, MicroStrategy aggressively added another 1,587 Bitcoin to their treasury. That's a cool $100 million purchase.
And on top of that, we've got a jaw-dropping stat straight from the blockchain. Whales, the absolute largest holders of Bitcoin, have violently ripped over 11,000 Bitcoin off exchanges and moved them directly into cold storage in just a 72-hour window. I mean, this is the textbook definition of a massive supply shock.
It's exactly like the on-chain analysts are saying right now. The wealth transfer from weak hands to strong hands is officially complete. By just absorbing all that selling pressure during the recent dip, these massive whales have established an incredibly robust foundation. They've essentially turned that $60,000 to $61,500 zone into a formidable defensive wall.
Let's look at the rest of the market. Section 4, high beta altcoin momentum.
Because of this renewed risk appetite, aggressive momentum is absolutely flooding into specific catalyst-driven assets. JITO is up a massive 28% ahead of the JTX launch, where 80% of revenue actually flows straight to the token. Stellar jumped 14% on the huge news of JP Morgan and MasterCard using the XRP ledger, and SUI gained 8% amidst new scrutiny over AI spending. So, the capital rotation here is fierce and it's highly targeted. But in stark contrast to this broader rally, we also saw Humanity Protocol plunge over 21% after a $32 million private key compromise. It's a tough reminder that individual project risks still loom very large, even when the broader market is pushing upward.
Finally, we have to talk about Washington again. Section 5, the SEC's strategic pivot.
Yep, the SEC is officially pivoting. A brand new draft strategic plan for fiscal years 2026 through 2030, released by Chairman Paul Atkins, proposes a completely new organizational framework that actively embraces market modernization.
Think about what this means. The SEC actually wants to officially clarify the scope of digital assets to truly support innovation. They're shifting enforcement away from regulatory overreach and back toward core actual fraud. On top of that, they plan to modernize their own tech infrastructure using responsible AI. It's honestly a completely reframed mission, focused on clear rules, structural efficiency, and stepping away from regulation by enforcement.
So that brings us to the ultimate question. The market right now is coiled incredibly tight between a global geopolitical relief rally, massive institutional accumulation, a completely reframed regulatory environment, and of course, central bank uncertainty. Can this newly established, rock-solid $60,000 institutional floor actually withstand whatever Chairman Warsh unleashes in his dot plot tomorrow? Well, you'll definitely want to keep your eyes glued to the charts because this spring is absolutely about to release. Thanks so much for joining me on this explainer today, and I'll see you next time as we continue to decode the data.